Because of today's sell-off, $400 billion worth of market value simply vanished. But wait, look again. For the week, stocks have lost. It gets worse, $800 billion in value. Think about it this way. That is your money, your investments, your retirement savings, and your 401ks. As bad as things were today, it could have been a lot worse. Markets across Asia to Europe were falling so steeply that this morning special curbs on early trading kicked in before Wall Street even opened for business. We want to go now to senior business correspondent Ali Velshi to explain to us what is going on. Ali, another bumpy week. Walk us through what's happening out there.
I woke up this morning to something called a limit down on the Dow. I mean, I had to look it up to remember what this was, and that meant that, futures, we talk about futures a lot. Futures are the bet on how the markets are going to do. They go on all the time. Futures, you couldn't trade them down anymore. It had hit the limit of how far down it could go on the Dow and the S&P 500, so the feeling was this was going to be the day. We had people talking about 1,000 or 2,000 point loss on the Dow. It seemed extreme this morning, even with everything we've seen in the last month, and it didn't turn out to be the case, and that's why nearly more than 300 point loss on the Dow didn't seem like that big a deal. I just want to take you back to the beginning of the week, okay? We were at 89.95. We've been talking about a range in this market between about 85 and 8,500 and 9,000, okay? So we were up above 9,000. Tuesday wasn't all that bad. Wednesday we finished down again. You notice it's always that last hour of the day where something crazy happens. Thursday we had a gain in the last hour, and then today closing down at 83.78, not too far off of that range we were talking about. Again, it is continued concerns about where this economy is going and whether it's going to get any better for us. We had more news today. Chrysler, another company, is going to cut about 5,000 salaried jobs, bringing this week's total announced mass layoffs to, just doing the rough math in my head, about 13,000, Campbell.
And Ali, home prices are down, but it's Friday, and you do actually have some good news for us as we head into the weekend.
A little light at the end of the tunnel, as you sometimes point out, Campbell. You got to be careful to make sure that light at the end of the tunnel isn't a train. But here it is. It's good news wrapped in bad news. The bad news is that the median price for a single-family home, median means the price at which half of all homes are sold for lower than that, half are sold higher than that. The median price is down 8.6% in 1 year to $190,000 and $600, almost $191,000. Where's the good news there? The good news there is if you do have good credit and you can get a mortgage, a 30-year fixed mortgage is still running about 6%, a little more than that, maybe 6 1/3, depending on where you are. More people are buying homes. We've seen a 1.4% increase over the same time last year to an annual rate of 5.18 million homes. Now, what that means is that there are some people who are trying to get into homes. They thought it was too expensive. They couldn't afford it. And now they're starting to think, maybe I can afford a home. I can still lock in a mortgage at a good rate. And there's a little hope there. If people start buying all these extra homes that are on the market, that's going to help us get this economy back.
Opportunity out there. Ali Velshi for us tonight. Ali, thanks. Have a good weekend. Later tonight,